New York's 400-year history, built on commerce, destroyed by politicians. Why capitalism made New York the capital of the world. Episode 1, How Finance Formed the Foundation of New York. A never-before-seen look at how New York City became the capital of the world. Travel back in time to when leaders of the Lenape nation met businessmen from Holland's Dutch West India Company. Tradition says that the unsophisticated and naive Lenape were duped by the crafty Dutch into selling Manhattan for a mere $24.
He said $10.
False. The Lenape were every bit as clever and careful as the notoriously cheap Dutch.
And for $10, you can get back on your little boat and sail down to New Jersey. Man, for $10, maybe you can discover something Hoboken.
$15? The outcroppings, it's all rock. How can anybody grow food here? I would be embarrassed for my family living in such a hovel. Maybe we should try Hoboken?
30.
20.
25. And that's final.
24.
Deal.
The Dutch settlers represented the Dutch West India Company. As company indicates, it was a business to discover and cultivate commodities such as sugar, molasses, and gold, and then ship those products from the New World to the Old World. The Atlantic trade was a speculative business, but it was reasonable speculation which attracted to New York and its environs many English settlers, traders, trappers, farmers, and sailors. They mainly settled in what is now Connecticut and to the east of what is now Long Island. Oh, no, debauched Wall Street, scam artists, and room temperature IQ fashion models arrived on Long Island long after civilization. By 1664, English settlers far outnumbered the neighboring Dutch in Manhattan. When the Anglo-Dutch War spilled over to the New World, Manhattan's importance grew. It was the largest settlement between French-controlled Montreal and the sugar plantations of Cuba, controlled by Spain. Blessed with a large port, Manhattan could have been an even more valuable piece of real estate then than it is today. To secure that piece of real estate, England sent warships to New York, following which armed English settlers from Connecticut and Long Island formed a pincer movement overwhelming the Dutch and forcing Peter Stuyvesant to surrender Manhattan to the English. Although the Dutch briefly retook New York in 1673, it was returned to the British under the Treaty of Westminster in 1674. For more than a century following the Treaty of Westminster, England controlled the port of New York. Immigrants mainly from the British Isles, but also from other parts of Europe, continued to settle in New York. The shipping trade grew. Ancillary services such as buildings, hotels, restaurants, farms, pubs, and, of course, the world's oldest profession. Everything that a growing city needs came to New York. Meanwhile, the Port of New York was a main destination for farmers' goods headed to Europe. Ships needed insurance for the dangerous passage to Europe. Their cargoes also need to be insured. American traders of fur, corn, molasses, everything that had to be shipped, needed loans to plant crops and pay for equipment. And then, insurance on the cargo in case a ship sank to Davy Jones' locker.
Deal. Deal. Deal.
Virtually none of the trade between the port of New York and Europe could have occurred in the absence of bank loans and insurance from the British. As Yogi Berra said, hindsight is 50-50. In hindsight, the British evacuation of New York after the Revolutionary War had a gigantic impact that propelled the city toward its fate as capital of the world. Why did the British evacuation from New York benefit the city so much more than other colonial cities with established ports? Why didn't the evacuation equally benefit, for example, Philadelphia? It had a population similar in size to New York's. It also had a well-developed financial sector and a calm, accessible, albeit slightly inland harbor. Or why not Boston? It had a perfectly good harbor and an established merchant class. The answer is, there could be many answers. Certainly, New York's geography helped. Closer to the Atlantic, more convenient for transporting goods throughout the East Coast. But the key difference, the most important difference, the major difference was who lived in those cities, and almost as important, who had left them after the Revolution. Like any port city, New York had more than its share of rough, aggressive, and desperate men, the type who had nothing to gain by staying in their homelands. However, unlike Boston and Philadelphia, the upper class in New York, that is, most of the merchants and bankers, were loyal to Britain before the Revolution, stayed loyal during the Revolution, and here's the key point. They fled back to England after the Revolution, thereby leaving the aggressive, the desperate, and those hungry for success to take their place. Meanwhile, up in Boston,
In his quest for home run number 400. Long drive, right field, way back, near the wall, and there it is! Home run number 400, Carl Yastrzemski!
hey, not yet. There was a homegrown American aristocracy, including the Adams, the Cabots, the Lowells, and the Lodges. They were known as Boston Brahmins. Brahmins being a reference to the highest caste in India. In fact, as late as the mid-20th century, a common saying went that the Lowells speak only to the Cabots, and the Cabots speak only to God. Philadelphia had its own homegrown aristocracy, including the financier Robert Morris, Haim Solomon, George Clyman, and of course Benjamin Franklin, who in addition to being a great statesman, was a great businessman. But for better or worse, Philadelphia's culture was greatly influenced by the Quaker settlers, who were kind, well-meaning, industrious, and neighborly, sort of like the Mormons of their time, except the Quakers were total pacifists. As for New Yorkers, not exactly the same as Quakers. New York had neither aristocracy nor pacifists. However, what it lacked in class, it made up for with a surfeit of smart, energetic men who were desperate, aggressive, and hungry for success. They filled the void left by the vacating British merchant class. But they weren't exactly steady on their feet. These, let's face it, they were ruffians, and they approached finance with methods they understood. Auctions were understandable, a common way to trade property. So to those unsophisticated fellows, it probably made sense to start with an auction format. However, trading property like land is different than trading property represented by a piece of paper, like a stock certificate, or the right to collect interest on a bond. Transactions involving paper raise problems of authenticity that are stickier than land auctions. Crooks and scam artists in stocks and bonds did not begin in the 20th century.
Let me introduce you to Jean-Pierre Lafayette, the Baron of the Lamargon. Oh! Jean-Pierre, or Prince J.P. as those of us who are his closest friends call him, is first cousin of Baron Lafoot.
Oh, very pleased to meet your cousin.
And is nephew of Louis XIV.
Oh, I thank your king, country, and cousin for their assistance in our war.
As do you know, John P. Not happy himself. France went deep into that to help finance our victory. Ships, troops, weapons.
Oh, thank you. Again.
Oh, it was heavy expenses. That is the price of liberty.
The price. Yes, that is the problem.
The problem. She is Mose or opportunity. She can have you.
Before the revolution, John P. had invested in a wonderful Italy canal company. $6 a share at the time. The last sale was $4 for 10 shares.
Why?
But this one-time special offer, never to be repeated again in the history of the Erie Canal Company. A company destined, I say. The canal will be a monopoly, as it will open up a vast and infinite wilderness, full of timber, corn, wheat, and,
Yes.
filled with everything else that is really good and can be sold in Europe too.
Uh-huh.
How much of this fabulous Italy Canal Company do you think John P. is willing to part with?
I don't know.
Not 1%. Not 2%. Not 5%. No. 20%.
Oui. She's la calamity.
20%? Well, I don't know. That would cost, but I think JP would sell it for $2.50.
Monsieur Freud, it is try grande.
You're right, John P. $3. Last trade was $4. He paid $6 for 20% of Erie. $2.75.
$3. My final offer. Deal. Such a deal. And they called me a fool, a fop, a flounder who's fiddling around where even experts flail around.
Nay,
Nah? Nah what?
nay as in no. These are forged.
Stop! Stop! Thief!
And there were other problems with the auction system. Today, we're used to thinking of auctions as something like this. But they were more like this. Worse, rather than being on the floor of an established organized exchange, deals were made in bars and coffee houses near the port. Luckily, you won't have to imagine the chaos. we have the earliest, genuine, bona fide, and incontrovertible word-for-word dramatization of a typical interaction.
What am I bid for 100 shares of Air Canal Corporation?
And what communication will you charge?
Usually 3%.
I mind God, but a good enough this man is. I sell for the same price and will take only 2.5% for myself.
2%?
1.5% for me.
1% commission?
1/2
Are you Michigan?
Mashugana like a fox.
More like a rat.
Rats aren't the Mashugana. They're very smart. What many people fail to realize about rats is that they possess an incredible
The rats. They're just rats.
and
And rats don't make a profit. That 0.5% commission, neither will you.
nor you.
But you'll go out of business.
No, I have plenty of money. You will go out of business. Much less competitor for me.
You'll go out of business.
You will go out of business. Much less competitor for me.
You dirty rat.
I'm
Rats.
As Samuel Johnson said, nothing focuses the mind like the prospect of being hanged within a week. For the stock traders in New York, nothing could focus their minds better than a big obstacle in their path to riches. As was brilliantly dramatized in Lin-Manuel Miranda's musical Hamilton, as Treasury Secretary, Alexander Hamilton formed a national bank to pay for debts incurred by America during the Revolution. This bank had sole authority to issue the currency of the United States, and in general had the power to act as the national government's own bank, collecting tax revenue, paying government debt, and more. To fund the bank, both stock and bonds were issued. Talk about investing in a growth stock. What could have been growthier or stockier than the newly created United States of America? As prices for both stocks and bonds rose, speculators borrowed money to buy securities tied to the national bank. Then, they turned around and tried to sell them at even higher prices. When the speculators ran out of buyers at the higher prices, they went broke. And their bankruptcies led to the bankruptcies of those who had loaned them money. And those bankruptcies culminated in the Panic of 1792, which was bad and scary. And I mean incredibly bad and scary.
Run, panic! Run chaotically in circles! Scream loudly! In other words, panic! Panic! You can't make a panic without bringing tables and chairs! Panic! Panic! And ripping up paper! Oh, yeah! And other stuff like that!
Fortunately, Hamilton devised a plan to end the panic. However, the panic's lasting trauma shook New York traders into action. 24 men who knew each other well, who trusted each other, met under a Buttonwood tree outside of 68 Wall Street and signed an agreement on how they would conduct business. What sprang from almost nothing under that Buttonwood tree grew into the most recognized name in finance. New York Stock Exchange. New rules solved most fraud problems. And by providing the 24 brokers with fixed, not negotiated, but rather fixed commissions for each sale. That is an agreed to amount to the brokers who bought and sold stocks and bonds. And with the newly founded exchange using part of those commissions to pay for operations and the purchase of a permanent site. The Buttonwood Tree Agreement created a much more secure method for trading. Yes, it was a form of monopoly, but it was also a form of insurance. Owners of a corporation could be assured that the stock and debt in their companies was being handled in a traceable and responsible fashion. And the buyers and sellers of stocks and bonds could be assured that the paper they were trading was genuine. Also, soon competition to the New York Stock Exchange did emerge. For those with riskier investment appetites, there would be the Curb Exchange, later called the America Stock Exchange, where trades literally took place on the street. In any event, for another 200 years, the biggest, safest, and most profitable American companies would be traded on the New York Stock Exchange. The assurance of safety and consistency were important, not only for the young country, but also for the city of New York. An obvious question is, what makes exchanges and finance so important to an economy? The answer is, think of somebody who had one of the greatest ideas ever, but didn't have the money to realize his dream. By selling stock, which is a promise to participate in future earnings. An inventor, a pioneer, a genius with managerial ability who was able to raise enough money, could then afford to make his dream come true. Also, at the time the New York Stock Exchange was founded, without bank loans that tided them over until harvest, farmers couldn't buy seeds, nor pay laborers, nor afford transportation to the market. In short, stocks and bonds are the grease that oil economic machinery and that make progress and better living possible. In large part, it was the sturdy and trustworthy foundation of the New York Stock Exchange upon which American entrepreneurs raised money to build their country. And not only to build the United States of America, but to provide momentum that launched New York's journey to the capital of the world.